Okay, we've put behind a very good series, but it does look like today the markets will have the overhang of the G20 meeting on its mind, so further celebrations are not in order. We saw that on Wall Street, and we see that at the moment in China as well. People holding back just to make out whether the trade and tariff issues will be resolved or whether it will be still left hanging. Remember, the meeting is in Buenos Aires in Argentina. So by the time it's morning for them, all these markets would have finished trading. And therefore, I guess it's going to be a consolidation period. A little bit of good news for the NBFCs. There are some more rules that have been eased by the Reserve Bank in terms of how quickly they can securitize loans. It's a minor tweak. It's not yet applicable to HFCs, but usually whatever RBI does, NHB does. So that will come because of the bond and the rupee and the gains made over there. My sense is there's nothing to lose in those markets. There is no reason for profit taking over there, at least in financials, I would think.
Okay, Lata, morning. Anuj, morning. You said it's Friday. It's also the start of the December series. I mean, you know, December, a month where you have Christmas, you have New Year's, you have festivity of Santa Claus, and perhaps you have a little bit of winter.
By far, the weekend is more exciting.
And a little bit of winter for whatever it's worth, right?
Absolutely, absolutely. For Bombay, that's a very big plus.
And of course, the money is coming in thick and fast, so there's no complaints there. Yesterday as well, FI has bought, what, about 800 odd crores or so, and put together now 5 straight days of buying, where FIs have put in about 3,100 odd crores. Not bad. After the kind of weak showing we had in October, it was a pretty fancy November for us. Anuj, morning. Give and take both the months, you know, sort of they've evened each other out, right? And the market is here now about 8% higher. What's the sense you're getting about the December series? The call that you had in November was to buy on dips and perhaps you'd make money. Would that stay through the course of December?
Morning, Sonia. I think the November targets were met 10,850 and we closed at 10,858. So perhaps really a big rally. And in November, the Nifty is up 4.5%, the mid-cap index is up 1%. And that's because the rally was driven by FI money. And when the FIs are buying, DIs normally take a backseat and let the prices rise. And the large money goes into the HDFCs, the IndusInds of the world. October and November have very different notes. October series optically was bad, but towards the end was very good. November series is very good, but towards the end there was a bit of a problem. So October series ended at lows, November ended at highs, but mid-caps started to outperform at the end of October. In fact, the October end was very good for mid-caps, and November end was slightly iffy for mid-caps. So that way, it's really topsy-turvy. The market is overbought. But today's first day of new series after a trending series is normally, accentuation of the trend. Accentuation of the trend. So today, there's a good chance that at some point we take out yesterday's high on the Nifty. But for those who've been, making money, listening to this call on buy on dips, this is going to be a month in which you have to do exact reverse. You have to take some money off longs this month. The market will give you rallies to take that money off. December series is likely to see culmination of current rally, and that may happen even if the BJP actually goes on and wins all the states. Even then, perhaps the rally may culminate, because from 10,000 to 10,800, 900, I think smart money has already played for that big move. And post the actual event, perhaps there could be some profit taking. So I think so far so good. Today, perhaps you may still want to play on the long side, but if you are a positional trader, let the others now join in, and you may want to just take some money home and enjoy the spoils. And December is a great month to go out and travel. Especially in the last couple of weeks. So perhaps do that.
For the weekend, we are going to be very busy with what the G20 meeting says. It's a make or break deal. I guess nothing substantive will happen just in one day, but the trade tariff talks are not a joke. For a better part of the world, it's, make or break, especially for China. And if China slows, then US also slows, because it's a big market. China is a big market for US goods as well, for all the apples and other products. Therefore, the world is at a turning point. This G20 meeting, otherwise, when have we ever covered a G20 meeting with such seriousness? We don't even know who are the 20 members. But for once, the world trade, the world economy hinges on people agreeing to lower tariffs or not extend tariffs over there. It's a very, very crucial meeting. It can be, okay, we are not big participants in it, but nevertheless, if the world economy is in a fine spot, we are in a fine spot. If world economy is sulking, we also will feel the pain.
And if world economy is flush with liquidity,
which
so
it is,
which it is so far. Yes, but it's been a great month for large caps, right? I mean, HDFC, HUL, L&T, ICICI Bank have all rallied 15-20% in the month of November. So let's see whether this Santa Claus rally continues into December as well. But on that note, let's take a look at what our wise experts have to say as we head into trade this morning. Paul Kitney of Daiwa Capital Markets says the absence of a trade ceasefire would drive valuations to the value zone, 8% below current levels. He says Korea is already in the value zone, while China looks to have much more downside if the trade war persists. He remains defensive but may add a little risk in the value zone or if a trade ceasefire becomes more likely. He says the energy bust provides a welcome relief to emerging market Asia, especially India and Indonesia. But it is a mixed blessing for Japan's reflationary goals.
Okay, so that's a summary of what G20 can do. Let's get you some money market views. Bhaskar Panda of HDFC Bank says benign oil prices, renewed interest in Indian markets has caused a complete turnaround in USD INR. He says since the pair has broken below the $70 mark, he expects the USD INR pair to remain below that and consolidate within a range of 69.75, 69.95 for the day.
Okay, and he also talks about the bond market. He says the Indian benchmark yields have also softened. He says he will not be surprised if the 10-year benchmark bond yield moves slowly towards the 7.5% mark. And he says the range could be between 7.58 to 7.65% for the day.
Okay, here's Mangalam with the world view.
Well, it's the world view, and the world is definitely viewing the big meeting between Trump and Xi Jinping. The markets across the world on the edge ahead of the big meet on trade wars. However, there's an external fear. Yesterday, there were reports that Peter Navarro is likely to attend the meeting between Donald Trump as well as Xi Jinping. And he's a hawk. He's been a hawk with regards to trade in the past. And that is something that spooked the street. On account of that, we saw a decline in the Wall Street indices. All of them ended closer to the lower end of yesterday's trading session. Across the Atlantic, though, the European markets were higher. That's primarily because they were reacting to what they hadn't reacted in the previous trading session. That was Fed Chair's statement. But those gains were limited primarily on account of the trade war concerns. The DAX, that one was an underperformer. That's primarily because Deutsche Bank, that one was lower by about 3.5% on accounts of a report of police raids at their Frankfurt headquarters. In the Asian markets, again, they are on tenterhooks. The big meeting is eyed, and the SGX Nifty, however, indicates a positive start.
Okay, the SGX Nifty indicates a positive start. Yes, a 31-point bump up is what we're seeing at the moment. But all eyes will be on Argentina as the G20 leaders arrive at the summit due to start today. It is one of the most difficult meetings in recent memory, with the trade being the most pressing issue this time around. Eamon Havers reports from Buenos Aires in Argentina.
World leaders gathering in Buenos Aires, Argentina on the eve of the G20 summit here in South America. This will be the first time the G20 has been in South America. It's also going to be the first time that President Donald Trump has traveled to South America. So much focus on the president and the president of China, Xi Jinping, and whether or not they can cut a deal. But of course, President Trump will be meeting with as many as 8 foreign leaders during the course of his visit here. The question with the United States and China is, can they break that trade tension that's happened over the course of the past 8 to 9 months or so? That situation worsening with the rhetoric increasing on both sides. Global financial markets have been focused on this G20 event as the place where we could see a breakthrough for a deal, but skeptics suggest that maybe a deal is not in the offing here. Maybe the best that global financial markets can hope for here is simply a trade truce in which both sides would agree to stop raising tariffs on each other. A lot of other storylines to watch here at the G20, of course, including Saudi Arabia. Mohammed bin Salman is going to be here. The EU officials are concerned that there might be new tariffs coming from the United States. And then, of course, North America, that trade pact recently agreed to by the United States, Canada, and Mexico, that could be signed here on the sidelines of the G20 as well. So a lot to watch for over the next 48 hours through Saturday night. And that's when we expect to see that big dinner between Xi Jinping and President Donald Trump.
Well, in a bit, we will play out to you Donald Trump's final statements before he started off for Buenos Aires. And that doesn't give away anything. We'll do that in a bit. And he's also taking Peter Navarro with him. And Peter Navarro is a China hawk, not just on tariff, but believes that China has to be just reined in. So it would be intellectual property rights. It would be so many things. So the world has to watch with to the nail-biting finish, as it were. And if it finishes at all or just drags on. We have one expert comment on it, but we will keep through the day at the story and tell you what's happening. This is Morgan Stanley's Ruchir Sharma saying that the market is expecting a ceasefire between US and China at the G20 meet. If it is, it will be, the world will be disappointed because he doesn't expect one.
I think the stakes are high in that the market's now sort of pricing in some sort of a ceasefire, some sort of a soft agreement. And if we don't get that, then obviously there'll be a lot of disappointment. But I suspect that we get some sort of a ceasefire. And I think the bigger story here is this, that no matter what happens at the G20 this weekend, we are in an extended era of deglobalization, which really means that this is death by 1,000 cuts. So it's not as if there's one event which is going to change things either for the better or for the worse, but this is a steady war which is going to play itself out over the next few years. And we've got to think about the implications of that for the global economy and who could possibly lose and even benefit from this era of deglobalization.
Okay, so the world is actually priced in a ceasefire and it could get disappointed. Actually, there's one more person who believes that, and someone who's an emerging market expert. This is an exclusive chat with CNBC TV 18. I caught up with Mark Mobius, the former executive chairman of Franklin Templeton Emerging Markets and currently floating his own fund, Mobius Capital Partners. He believes that the Fed statement is a positive, but the US-China rhetoric could continue be a negative influence on the world in general.
Well, I think he's feeling the Trump power. I think Trump, as you know, didn't like him raising rates.
Yes.
So I think he's giving a token benefit to Trump in some ways. But on the other side, I think it's fair for him to do that. He probably will have another hike before the end of the year, and then they'll probably be in a pretty good space to prevent any further big uptick on inflation.
Okay. No, I take your point that there would have, many people will look for a Trump effect. But you'll have to give it to Jerome Powell that there has been a fairly steep fall in crude prices and several other commodities as well. And we saw even metal prices falling. So is it possible that you will see the dot chart change when the Fed meets and we are going to see the markets pricing in fewer rate hikes in 2019?
I think so, particularly if oil prices stay where they are or maybe even go lower. I mean, that is the key point. I think the point that you just made is very, very good because at the end of the day, inflation in America is very much dependent upon what people have to pay for their gasoline and all fuels. So this is going to be a very important point going forward. Hopefully the oil prices will stay low, and that will be good for the U.S. And by the way, good for India, good for China, and good for many other countries.
Yes, I take your point that for India it's a very, very big advantage. But just a word more on the global scenario before I come to emerging markets. Do you think we shouldn't run away with this change scenario? Do you think things like, non-farm payroll numbers or, the Chinese, Trump-shy meet at the G20, all this can give growth a leg up and this could just be a trading bounce?
Yes, but I think we have to be very careful about the China-U.S. trade war. I don't think it's going to be resolved anytime soon, simply because it's now not only about trade, it's about technology transfer, it's about rules and regulations that foreign companies, particularly U.S. companies, have to endure when they go into China. And all these other factors are playing into this in addition to the military side of things, where the U.S. is beginning to say, now, wait a minute, China is getting too powerful in the South China Sea, they're taking too much territory, et cetera, et cetera. So I think it's a wider issue that will take time to be resolved. But what I've been saying to everyone is that, look, in a situation like this, there are winners and losers. And I believe that a lot of the exports going from China to the U.S. could be well going from India to the U.S.
Yes.
or from Vietnam to the U.S. or from Bangladesh to the U.S. so forth. So there's a great opportunity for many of these countries to diversify their export base to the U.S.
What's your base case? Do you think that an uneasy truce prevails? Do you think things get worse from here? Just draw up the tariff map and the polemics of the US-China battle over the next, say, 3, 4, 6 months.
I think the U.S.-China battle will, in the next 4 to 6 months, will get worse, not better, because Trump and his team have really dug in their heels and said, look, we want some change on the part of China. And China, on the other hand, is also dug in their heels and say, look, we're not going to give away our $300 billion trade surplus with the U.S. easily. So, and don't forget, jobs are at stake in China. So I think it'll be difficult.
But basically, as of course a veteran investor in emerging markets, are you getting the sense that the weight is now shifting in favor of emerging markets? Even before Jerome Powell's statement, it looked like developed markets were beginning to underperform emerging markets.
You know, that's for sure. As you know, the U.S. market is down by about 10%. It's had a little jump recently, but basically we're now in, let's say, a level playing field with the U.S. market, maybe even going down. But people are beginning to think, well, wait a minute, we've had this incredible run in the U.S. Maybe we should start diversifying. So we're seeing a lot more interest now in global markets outside the U.S. And of course, that means emerging markets as well.
Well, all eyes will be on the G20 meet and the outcome over there. But in the meantime, some of the Asian markets have been slightly cautious. In fact, you know, in China, the big talking point is that factory growth has stalled. The PMI data has stalled for the first time in 2 years. So definitely trade was affecting China. The Shanghai market absolutely flat. But our own market has a lot of steam, as we've been seeing over the last few days. SGX Nifty suggesting that the going will be good this morning. Our research team is here to give you the list of top 10 stocks as we head into trade today. Anuj, what would you be looking at?
Yeah. Sonia, before that, for our viewers, this SGX number that you're seeing, 10,952, it's now December series. So there's a big premium, obviously, that December futures have. So the you know,
how much is that?
Yesterday's Nifty spot closing was 10,858. The futures closing was 10,890 December series.
So 40 points more.
Yes, but still, it's a big gap up that the SGX Nifty is indicating. A gap up which should be enough to take the Nifty higher than yesterday's high of around 10,883, which was my base case. In terms of stocks to watch, one mid cap, one large cap. I think Trent is very interesting. I was looking at if there was some block deal yesterday, because there was very, very big pickup in delivery volumes yesterday, and the stock bounced from 200-day moving average. But the stock that's been on my radar for some time now, and I think perhaps looks good for more, is Maruti. It ended down yesterday because of expiry issues. There was some call open interest at higher levels, so that's the reason there was a bit of a lid on the stock. But it's in a very, very strong uptrend, trading above some key moving averages, the 8-day moving average, which is the nearest to moving average. And anyway, it's shown signs all through the last month that bad news is being bought in Maruti finally. So that perhaps could be, from my point of view, the index stock of the day today.
Okay, that's good. Well, I'll focus on NBFCs because the Reserve Bank has focused on NBFCs. Yesterday, some rules were announced making it easier for them to securitize, sell off their loans. And what was that rule? For loans over 5 years, the Reserve Bank's old order used to be you have to keep it for 12 months. Only then you're allowed to sell it. Now, that retention period has been crunched down to 6 months. It's only for over 5-year loans. But then these are loans, even when they originated, they were 5 years. So at the moment, a Shriram Transport or a MMFSL will have quite a few loans which are 5 years, or of Grah Finance for that matter. I mean, they will have even more. Therefore, they could find a larger pool that they can immediately securitize. It comes with the caveat that you have to keep 20% of the loans. Originally, you had to keep only 10%. Okay. But the point is, more number of loans are available for sale for the NBFCs. Now, I must say, I said Grah Finance, I shouldn't have, because this rule will become applicable to housing finance companies only after the NHB notifies it separately. But the NHB always follows what the RBI does. It's almost mandated. and therefore you at the moment you may find the rally in MMFSL and Shriram Transport, but I can be very sure that HDFC, Indiabulls Housing, DHFL, Repco, all of them will also gain because it's only round the corner, the announcement. Very good for these NBFCs.
Okay, so we'll keep an eye out on the NBFC names, but Tata Motors, I expect that stock to be under pressure today. Remember, in October, the Solihull plant of Jaguar Land Rover was shut down for 2 weeks for operational efficiencies. Now they've decided to shut down another plant for 2 weeks, which is their Wolverhampton plant in UK. This 2-week production freeze will impact 500 full-time employees. Although the affected staff will continue to get a full pay, so they have to make that payment definitely to them. It's the same old reasons, Brexit uncertainties, decline in diesel car demand and lower sales in China. And now with the PMI data in China also slowing down growth, there's no growth in China. That market is a big pain point for Tata Motors. In fact, UBS has come out with a report. They've cut the target price on Tata Motors to 200 versus 280 earlier. They say that the recent sharp fall in China's volumes have clouded the outlook for JLR. China is JLR's most profitable market, and now that's under a lot of stress. And they've also turned cautious on the Indian truck market, and they've cut their earnings estimates over there. So looks like there could be some red on Tata Motors today.
Okay, thanks for that. Rima, you have Voda Idea on your radar.
Hi Lata, good morning. Bad news for Vodafone Idea as well, because CRISIL has downgraded Vodafone Idea's NCDs, which are worth 6,000 crore rupees. While they have reaffirmed the rating on the CP or the commercial paper, but for the NCD, the rating has been downgraded to CRISIL AA-, has been downgraded to CRISIL A+ from AA-. Separately, the company has also demerged its fiber business to a wholly owned subsidiary. And this is one step for the company to eventually sell the fiber assets, which is already known and indicated by the company. So the fresh development is the CRISIL downgraded the NCDs. So a bit of a negative news.
Okay, thanks a lot for that. Well, here's a quick recap then of our top stocks to watch. Stocks with positive news flow: M&M Finance, Shriram Transport, HDFC, Indiabulls Housing, basically the whole bunch of NBFCs. Trent and Maruti is also what we're looking at on the upside, while stocks with negative news flow this morning, the two stocks that we just spoke about, Tata Motors and Vodafone Idea.
Okay, but we're not done with stocks that you should watch out for. Nimesh has a bunch of stocks on which there were big block deals, so watch out for them. Nimesh, tell us.
Yes, Lata. So I think the big stock to watch would be Repco Home Finance. The stock was down 5% yesterday after the famous investor Manish Pabrai. That fund sold close to 10 lakh shares, which is around 1.5% equity in Repco Home Finance. And remember, they own 6.5% stake in Repco Home Finance. So maybe that stock will be further under pressure. And actually, the stock has been seen a big derating since the beginning of the year. So that's one stock to watch out for. The other big stock would be Future Retail. Yesterday, Bharti Retail sold close to 40 lakh shares and was picked up by one of the mutual funds, which is Edelweiss, and they've bought 40 lakh shares. I think the stock will also be in focus because of repeated reports about Amazon buying stake in the company. So again, that's a stock to watch out for. A couple of other mid-cap names where there was some bit of fund action. One is Mahindra Logistics, where Reliance Mutual Fund bought close to 10 lakh shares. MCX saw a bit of a block deal, and Eastbridge Capital bought some shares in that stock as well. And Equitas will be a stock to watch out for. Kotak Mahindra Multi-Cap Fund, they have sold close to 25 lakh shares at 105. So, but the big stock to watch, I guess, would be Repco Home Finance, on the back that Manish Pabrai's fund has sold close to 1.5% equity.
Okay, well, they've sold equity in Repco Home, so keep an eye out on that. Thanks, Nimesh, for that. But a lot of brokerages coming out with views on individual stocks. Sonal is here to give us that list. Sonal, what do you have?
Good morning, Sonia. Well, we were talking about NBFCs earlier and how they will be in focus. Well, Morgan Stanley has come up with a report where they talk about the relaxation given by RBI on securitization by NBFCs. However, they say that more relaxation is needed by the housing finance companies, and hence they are expecting NHB to notify guidelines for the housing finance companies in due course. NBFCs will be in focus today. We were also talking about Maruti, and CLSA, that has turned positive on the company. They already had a buy rating with a target price of 90 to 100 rupees per share. They think there will be gradual recovery in the company's growth, considering the ownership costs have tapered off. However, for quarter 3 itself, they expect margins to be lower because of higher discounts given by the company, and therefore they have cut the FY 19-21 EPS by around 3%. Sun TV is also in focus because HSBC has written on them. They think that the biggest worry for the company is the constant declining viewership for the new channels. They are not getting any new viewers, and hence they are reiterating their hold call, but they've cut the target price price to 703 from 855 rupees per share. They have also cut the ad revenue estimates by around 4 to 5% for FY20 and 21. Marico will also be in focus because Citi has written on the company. They see that there is a consistent fall in copra prices, because of which the gross margins will improve going forth. Also, they have increased the volume guidance for the company. So positive news coming in for Marico. Back to you.